Imagine a country getting a golden ticket to a global financial feast. That's exactly what India's inclusion in the JP Morgan Bond Index signifies. This remarkable inclusion has been somewhat delayed due to unresolved operational issues, including local bond settlement rules, tax complexities, and repatriation of investor funds. Nevertheless, these hurdles are expected to be overcome by the end of 2022. Once these issues are resolved, India could become a significant magnet for investments. We're not talking small change here. The estimated figures suggest that India could attract around $30 billion within just 10 months of inclusion. And over the next decade, the numbers are staggering, ranging between $170 billion to $250 billion. This inclusion isn't just a milestone. It's a testament to the growing confidence of global investors in the Indian economy. Now, this isn't just a victory for the Indian economy as a whole. It's a massive boost for the infrastructure sector. Imagine this, an expected inflow of $25 billion from June 2024, all pouring into the infrastructure sector. This isn't just a pipe dream, it's a reality that's fast approaching, thanks to India's inclusion in the JP Morgan Bond Index. This influx of funds is a testament to the global investors' confidence in the Indian economy, and more specifically, the government's fiscal policy. Here, infrastructure spending has been a key focus area, demonstrating a clear commitment to growth and development. The government's vision is embodied in the ongoing National Infrastructure Pipeline, a grand project that comprises projected infrastructure investment of around 111 lakh crore rupees. This is set to provide high-quality infrastructure across the country, bolstering the economy and improving the quality of life for millions of Indians. But why India, you might ask? At a time when major economies like China are facing slowdowns and Russia is grappling with intense sanctions from Western nations, India emerges as a bright spot for investors. This vast country, with its burgeoning middle class and commitment to infrastructure development, presents a golden opportunity for those looking to invest in a growing economy. The inflows through this passive investment route, estimated to be $24 billion, are expected to be deployed for longer gestation. The eligible bonds should have a maturity profile of at least 2.5 years. This means that the funds will be invested in the country for a significant period, providing a stable source of funding for infrastructure projects. As the saying goes, when one door closes, another opens. And in this case, it's a gateway to a thriving Indian infrastructure sector. So, who stands to gain from this financial windfall? Well, the answer is quite intriguing. The beneficiaries of this remarkable inclusion are the titans of India's infrastructure sector. Firstly, let's talk about the power and infrastructure companies. The Adani Group, a multinational conglomerate involved in a plethora of sectors including energy, logistics and resources, is expected to see a positive impact. This inclusion could mean increased investment, allowing them to further expand their operations and contribute to the robust Indian economy. Next, we have Reliance Industries. They have a broad spectrum of operations ranging from petrochemicals to telecommunications. The infusion of international investment could provide them with the capital to push the boundaries of innovation and maintain their position as industry leaders. Tata Steel, a key player in the steel industry, can also anticipate benefits from this inclusion. With increased investment, they can continue to modernize their production processes and contribute to the nation's infrastructure development. Moving on, let's talk about airport operators. They have a unique role in the infrastructure sector, connecting India to the world and facilitating economic growth. Companies like Delhi International Airport Limited, GMR Hyderabad International Airport Limited, and Mumbai International Airport Limited have raised significant funds from dollar-denominated capital markets. With India's inclusion in the JP Morgan Bond Index, this trend of raising capital is expected to continue, if not accelerate. These companies, among others, are at the forefront of India's infrastructure boom. They are the ones building the nation's future, brick by brick, beam by beam. The increased investment resulting from this inclusion will provide them with the resources they need to continue their vital work. In the world of finance, every decision creates winners, and in this case, the winners are the companies powering India's infrastructure boom. So, what's the big picture here? Let's recap. India's anticipated inclusion in the JP Morgan Bond Index is a significant move, reflecting the confidence of global investors in the Indian economy, particularly in the government's fiscal policy. This inclusion is set to infuse a substantial amount of $25 billion into India's infrastructure sector from June 2024. The National Infrastructure Pipeline, a cornerstone of India's growth strategy, is projected to invest around Rs 111 lakh crore for high-quality infrastructure development across the country. Amidst global economic uncertainties, India emerges as the ideal bright spot for investment. Reaping the benefits of this development are power and infrastructure companies like Adani Group, Reliance Industries, Tata Steel, JSW Steel, Hindalco, along with airport operators like Delhi International Airport Limited, GMR Hyderabad International Airport Limited, and Mumbai International Airport Limited. In the end, it's not just about the money, it's about the confidence, the growth, and the promise of a brighter future for India's infrastructure sector.